Investing in wine is certainly more fun than buying a government bond, but the ins and outs of this growing investment class are still as murky as your head after a glass too many. South African wines are growing in importance around the world, but do they classify as investments?
When it comes to seeking investment quality in wine, it has less to do with vinous essentials and a great deal to do with the reputation of the producer. Having said that, nobody is going to buy a wine that doesn't have aging potential. So to the extent that you're looking at red wine, you would look to varieties that have a proven record in terms of aging. You would look to wines that come from the very best vintages from that producer, as well as being very good vintages, because the vintage has its own reputation and the producer's performance in that vintage is also of some importance.
South African wines are well regarded in the international market, but this hasn't helped much towards building an investment platform. Big wine auctions may be the key to jump-starting the local market. Until then, your best bet is with established French wines from the Bordeaux and Burgundy regions, which can return as much as 15 or 20% on your capital.
If you're investing in wine, in South African wine in South Africa, the return on investment you're going to get will be less than if you left your money in the bank at current interest rates, because South Africans tend not to pay a substantial premium for older wines, and it's almost fashionable in the local market to say that since the quality of winemaking and the quality of our vineyards has been improving year on year, the latest releases are probably better than the earlier ones. The net effect is that the only investment value in that is you will have maturer wines that won't sell for less than the current release. The current release increases every year at the rate of inflation, so you have an inflation hedge and very little more.
If you're a stock market first-timer, your broker may advise you to stick with well-known blue-chip stocks. Wine isn't much different, and South Africa's more well-established wine farms should be your first choice. And once you've downed a stiff drink to get you over the initial price tag, remember to budget for the other big cost of your investment: storage.
Storage plays a huge part in that, because if it's badly stored, it loses its value altogether because the wine goes off. So you need to store it at an optimum temperature, which is, for me, red wine's round about between 14 and 16 degrees. It needs to be in a nice, wet, humidish sort of environment in a cellar so that the corks don't dry out, and it needs to be turned as often as you can just to get some movement in that bottle.
Now, if you can't be bothered to trade directly, or you don't know the difference between your Tassis and your Rubicon, then consider using an online option called Livix that connects professional traders to wine merchants. And one last word of advice: buy wine that you actually enjoy drinking, because unlike stocks and bonds, this investment has another, more useful purpose.